Hello guys, glad to have you on board again today. Sorry about the little delay, I kind of forgot once again. But for my defense, I do have a lot of things to take care of now, not to mention the Interchain Developer Academy, which takes a hell of a lot of time away from me. And I still have to sleep, so that's really the way it is. I'm sorry for those delays. Also accounting for the fact that all the exercise sessions that we generally were going to do once a month on Tuesdays are currently a bit delayed due to this same Interchain Academy stuff. So of course, summer will be kind of irregular as well, because just like any regular person out there, I will probably take some vacations, which means, well, of course, don't be disappointed. Everything will go back to normal by September or so, and we will get to those monthly exercise session as promised. Just a quick note. Okay, straight to the charts now. You shouldn't be very surprised, because that's exactly what we were mentioning last week. So we're definitely on track in here, mentioning that we would probably find some bullish signals when the market will try to close below the context after reversing it or not. Though we've had the answer, the market has reversed it. We found the bullish signals below the context. The thing is that, well, to me, there weren't really conciliant with the type of signals that we're expecting, as we had absolutely no bullish signals in here. We had trending signal, but remember, I don't want that. I said the trend is very likely going to neutralize. It's now confirmed by the reversing of the context, so I would like to see some more neutral kind of gray signals, not the blue ones. So that's the reason why I didn't took these trades, even though we had some nice risk limitation with the target in here. So I decided not to jump in because of those squeezes and the fact that we were consolidating in that very narrow channel. Just didn't want to be the market maker's bitch. So it was really like, yeah, okay, not that great. I'm just gonna let it be. It could be a good trade, but I don't want to be in. Now future sales, well, this trade is validated and retraced to the 50% context. So, well, it's confirmed. So your stop should be at break even and you should let it ride, okay? Remember, these trades were only for those who were taking profits before, okay? So those who were earlier than expected, triggering profit takings, that would have to be reinvested afterwards, all right? Now, anyway, we've got the third range boundary. So folks, remember the fucking pattern, all right? We're at the second flow in here. It's just the same pattern as it is. It's just repeating. So now we're waiting for the third range boundary. We're waiting for the third range boundary. We now have evidence that it is very likely going to come. We've reversed the context, so we know that the higher we go, anyhow and anyway, there's a block. There's something that's going to block us. That's the third range boundary. So now we're going to get it. The question is, are we going to go lower first? Okay, that's a very likely possibility. You don't control anything about the price structure. All you know is that whenever it goes there, even if you've taken the trade or not, you need to take the gains from everything you've taken previously. This flow, this second flow, is now over, and you need to lock your gains, all right? So that's the way it is. The current stance, which you should be in, is no matter which trade you took back then, or whatever, all of these trades are now at break even, okay, and you're waiting for the third range boundary to take their profits. That's really the way it is. Is it going to be, we do it today, you take your profits, thank you, goodbye, okay? Or is it going to be, no, we're going to stress you a bit, we're going to go lower, we're going to just stress you, but we'll get there anyway, okay? That's really the way it is. The market will maximize the path for uncertainty and play with volatility around that game. So just don't try to get yourself irrationally moved by market makers. You know one thing, we're going to get to the third range boundary, God knows when. Just take your profits when it happens and wait. What the next stage is of course, Bollinger Band only, okay? But you trade the Bollinger Band. Remember, this is a step sequence. The step in here can only happen if you have that. So if for whatever reason, the prices were going there, would you like to buy the Bollinger Band? No, you don't. Remember, no third range boundary, no Bollinger Band. So in here, you wait for your third range boundary, you have your previous trades at break even, and the market will very likely get there or do whatever the fuck until it goes somewhere there, and you take your profits and then you move on. And once you've got that third range boundary, only after you buy the moving average, the Bollinger Band, all right? So that's the way it is. Follow the sequence. The sequence isn't perfect. God knows what the market will do. It may do something absolutely different from that. The third range boundary could be squeezed. That's also another possibility. In that sense, well, there's nothing you can do about it. It will happen and you just keep it going, okay? if you take your profits in here and if the market decides to squeeze it out and keep playing that second flow, well, that's how it goes. You know what to do with squeezed third range boundary. You'll be able to buy back them on the retracement. Okay? Any other way, you just take your profits on the third range boundary now that you have it. So there's one thing you know for sure. The market goes higher, you go out. All right? So that's the way it goes. And until then, you just don't let yourself, if for whatever reason we were to go 180 degree today, like a minus 2.5% day on the S&P, everybody screaming out loud and stuff like that, well, don't be overmoved by that. Just let it play out. Okay? Just be patient. The key in here. Aside from that, we were mentioning cryptocurrencies as well on a regular basis, so let's keep updating. Last week, if my memory is right, we were mentioning these prices, or we were trading along with these prices, and my assumptions were, well, we're very likely going to try squeezing this third range boundary. And to squeeze, remember, all of this is in the pre-C, okay? Squeezing a third range boundary requires few things. It requires to make a new high, okay, which we could argue is pending. This might not necessarily be enough. So we shouldn't trade above this previous level. We need to trade above the higher time frame context, which on terms of Bitcoin is somewhere around 32K. And remember, this will update by the next month, which is in a couple of days. So we will have an update on this level, and we need to trade and close above these levels to confirm that the third range boundary has been squeezed. If the third range boundary is squeezed, then what does that tell us about the flow sequence? Okay, that tells us this isn't that. So if we make new highs, that means we're still in the second flow. Sooner or later, it will reverse, make a third range boundary and reject it. And only at that point, you will get to maturity stage 4, buying the Bollinger Band. All right. So until further notice, well, there's nothing we can do. We don't know yet. Either that is a third range boundary, and we're going to go back to the Bollinger Band. Okay. That is a flat third range boundary. It trades above the context, retraces, and so on. It's going to be a double top-like pattern. And we're going to go back down to the Bollinger Band, where, once again, you're going to have to buy. Okay? Just following the goddamn straight rules. And you don't try to bend anything in between. Okay? That's really the way it is. Blindfolds on, you apply the goddamn rules. All right? So for now, you don't know yet. For confirmed squeezing, okay, that requires going higher. If we go higher, you have the answer. The market has squeezed, so you weren't there, you're still there. You're still in the second flow, waiting to get a third range boundary that will reject prices. Okay? That's really the way it is. Don't make it overcomplicated. All right? You know everything there is to know about cryptocurrencies now. So personally, I have decided, remember, I have traded in here back then. Same strategy as I did back then on the S&P 500, meaning when the bears finally succeed to finish a cycle in a flow, I personally generally tend to buy. So I bought in here thinking that we'll go new highs and stuff like that. Well, it turns out it didn't. We've gone on to a long consolidation. People have been yelling at me saying, yeah, this guy is stupid. He holds a trade in a loss. Well, like I said, I'm just a trader. I'm making some money. Sometimes I'm losing sometimes, but net, I make a hell of a lot more than what I lose. It's just losing sometimes is part of the job. So like I said, I wasn't overthinking things. I was like, okay, the bears are kind of succeeding. They reverse the context, so there might be strong enough for me to decide getting out on the third range boundary. That was the plan all along for me, taking these trades, and I would exit these trades there. Remember what I told you back then when I was there? First thing I done, take the profits for these trades at a gain. Okay, I took an additional trade in here, and this one I decided to take it off throughout the week. Somewhere around 30K and 30 and a half. So that's really somewhere in there. I decided to take the entire profits. Why is that? Well, like I said, I don't know. Could be a third range boundary, and we could be right down to the Bollinger Band in a couple of months. I don't know, and I don't try to know. Okay, the thing is that on Bitcoin, I think I personally decided to take the gain. Okay, that's what the strategy tells me. We've reversed the context. I think this second flow could be terminated, and therefore I could play the risk of going for a squeezed third range boundary, and I decided not to. The reason why I took it all on Bitcoin is because I kept it open for Ethereum. Of course, as a partial profit taking required in here. Remember, Ethereum was similar pattern to me. we've gone down here, we've made a delayed third range boundary, and I've always said a delayed third range boundary are always tasted back by the market. So we're now in the bearish context, and the reason is two things will happen in here. Just like Bitcoin, either we're going to squeeze that third range boundary, which means we're going to fuck it all of this area, try to trade at the 2000 and above, and we'll try trading above the higher time frames context, which in Ethereum's case is much higher. Okay, of course this context will hinge lower, which means Ethereum has to go 2.2k in order to confirm the squeezed third range boundary. The reason why I've done this market management is due to this. Okay, I had trades in Ethereum and Bitcoin in similar contexts. Okay, they both offer a third range boundary now. Okay, and on that sense, I decided to take the profits all across the board. I took some profits on Ethereum, on Bitcoin. I decided to take them all out on Bitcoin and stayed with a 50% open trade on Ethereum with a stop at break even. For this part, remember this part on Ethereum, I took it off pretty much near the current prices I got in. So that's really the way it is. No gain for this position, and I took 50% gains on this one and put the stop at break even. So two things will happen now. Remember, to Bitcoin and Ethereum have similar context, which means there are two options. Option number one, this range boundary rejects, and we're going to go back down to the Bollinger Band. Bollinger Band on Ethereum is rising, and we'll get to buy it. So if and only if this one goes lower, okay, it will take my stop loss at break even, and I'll probably trigger another trade pretty much at the near same price. Though you would say, well, that's stupid, Phil. Then in that perspective, why don't you just put the stop loss further away for that trade? Well, lesson number one, don't ever trick the rules. When one trade has one risk limitation and this one got stopped out, you can sometimes take another trade, but it has to be on another and different context. So this trade to me, remember what it is. It is just once the bears terminate a cycle in a bullish flow, I generally tend to buy. Okay, so that's another way to do things to maximize the gains in a flow trade. Well, in here, it hasn't been an easy task to perform because anytime the bears finished a trade, it's always been a good opportunity to go in, but it hasn't delivered. It took way longer than expected to deliver trading the resistant context. Though that means the risks I took weren't yielding benefits. Okay? But they haven't gathered the loss either. It's just, well, that's how it goes. This one, this end of this bear cycle, was delivering the gain. The question is now, two things can happen. We go there, I lose what I decided to still get open. That's one way to go for. I took 50% off, and the remaining 50% could be a missed gains because I decided to go further and it didn't. Option number two, we squeeze, and remember we're going to have to go 2200. Though, in order to squeeze Bitcoin, we just have to go like, 7 to 10% higher than the current mark. For Ethereum, if we want to do the same thing as Bitcoin, squeezing the third range boundary, that's a 20% plus, 25%. So on that sense, for the same level of risk, I have more, or at least somewhere like twice the rewards in Ethereum. And this is the reason why I decided to keep a portion of my Ethereum trade open instead of Bitcoin. Of course, that also means for similar levels of risks, okay, if for whatever reason you have two trades which have similar levels of risks, and one offers more reward than the other. What does that tell you? That tells you that this asset has slightly lower chances of success. That's the way it is, okay? Otherwise, this one would be free money. So there's always an adjusting variable in here. The variable in here is the rate of success. Typically speaking, generally this asset has slightly lower chances to succeed in this venture than this one. All right? That's what it tells. But like I said in here, this assumption to me is, yes, everybody is talking about it now, that Ethereum's underperforming Bitcoin, that all the money is going into Bitcoin because Bitcoin ETF, Bitcoin this, Bitcoin there, even Bitcoin Cash to the moon, bro. That's really stupid narratives. Like I've always said, I never follow narratives in trading, and specifically not in flow trade. So my narrative in here, or my risk limitation in here is, I don't give a fuck about those Bitcoin maximalist narratives and Ethereum's underperformance. All I'm saying is, to me, they will both go in the same way. So they both have same probabilities of either succeeding or failing in the endeavor. So if they do have the same risks and therefore bear the same probabilities, If one gives me twice the reward, that's the one I'm willing to keep the trade open on. That's really the way it is. I don't really know anything about the answer. All I know is that I had volatility alerts, so I know one thing. Ethereum is either going there, and I'm going to lose my gains, or it's going there, and it's going to be freakingly volatile, folks. So all I'm saying is, I'm a risk taker. I'm taking the risk on Ethereum. That's the way it goes. If it goes lower, I'm going to lose the gains. Yeah, too bad. That's the way it is. Anyway, net on the overall trades, Ethereum, Bitcoin, even though I took some stop losses on Atom and Chainlink is still pending, even if I got stopped on Chainlink, I got stopped on Theta. Okay, so for now, this one is like, yeah, mixed feelings. This one stopped. This one stopped. This one gain, and this one gain. I can tell you that the net of all of it means even if I were to be stopped on Chainlink, I would still be net winning. So that's the way it goes. Some trades might be well, some other not. Some may be taken out of break-even prices and so on, but net flow trading is profitable. And God knows, we would easily argue that this freaking last few months on cryptos have been very hard to navigate. But the truth is, if you follow the goddamn guidelines of a simple set of rules, you can hardly come out of this with a loss. That's really the way it is, even though it was a freakingly tricky market, and even it for me was. Yeah, the end of it is if you're patient enough and if you let yourself guided, well, it delivers. So that's the lesson for today, folks. I'm going to stick with it. Of course, don't try to blindly copy. Remember, I do things and I try to share it openly so that you at least try to understand slowly but steadily how professional works. In here, like I said, this is an assumption that I make. I don't go down the stupid narratives now of Bitcoin only and Ethereum is going to go to the cave, whatever. I'm just saying if one fail, the other will fail as well. Though my loss is the same. In terms of rewards, if both relaunch their second flow, one has twice and double the benefits to deliver, and I have signals suggesting it could catch up pretty rapidly. So all I'm saying, I have the evidence. This evidence is on the charts. This isn't some stupid narrative on the latest news flow of some stuff. I'm just following the goddamn charts. If I want to take some risks, I think Ethereum is the big boy to do so. Is it willing to buy now? Of course fucking not. That's really the way it is. I'm buying only when the bears terminate their cycles. Okay? So that's really the way it goes. All right? That's enough for today, guys. Stay safe. We'll see each other again next week, which will means we'll have the monthly and quarterly candle close effective on top of that. But that's the story for the weekly chart reviews. That's it. Well, see you guys on Monday. Bye-bye.